Hey there, Florida homeowners. Today, we are talking about something that can protect one of the largest assets you may have. We're talking about the homestead exemption. So whether you're a homeowner, thinking about being a homeowner, or a seasoned pro, let's dive in and break it down. So there's a few protections that the homestead provision actually creates for you. And while most people think about it as a tax benefit, I want to talk about the protection it affords you. So in the state of Florida, if you homestead, meaning it is your primary home, you actually have protection against bankruptcy and judgment. So if you come across bad financial times, you are actually protected and you know that your home will not be taken by creditors. That's a really good protection. And again, talking about one of the largest assets you probably have in your portfolio. So now let's get into the tax benefits. There is a $25,000 tax credit against the assessed value on all line items on your tax bill. And then additionally, for the non-school items, there's an additional $25,000 credit. So up to $50,000 on many of the tax lines against your assessed value. So while this is a good benefit, as you get higher in the price point, it's not as significant, the savings, but there is yet a second benefit that is much more powerful. So one of the most unique benefits of the homestead exemption is the Save Our Homes component. And what that really means is your assessed value cannot go up by more than 3% or whatever the CPI amount is, whichever is lower. So imagine, and I'm going to put some stats up here on the screen, but just imagine what we saw in the last 4 to 5 years with COVID across the country, quite frankly, but especially in Southwest Florida. There was significant appreciation, somewhere between 65 and 75%, even higher in some pockets, depending on the community. But imagine if this was your primary home, you had your homestead exemption, your assessed value will not go up by more than 3%. That's super remarkable. And it's really designed, again, the Save Your Homes Act, it's designed to save people that are on fixed incomes from not getting priced out of their home if the area around them continues to appreciate, which is exactly what happened. Your taxes aren't going to jump incredibly if you have a homestead protection. Now, this can make it tricky. If you're on Zillow or Realtor.com or any of the home search sites, we get asked this question quite a bit is, how come the taxes look so low? Well, this might be one of the reasons why. If in fact you're looking at someone that's owned a home for a long time, it's their primary home, they're going to be paying much lower taxes because of that cap on the assessed value. So here's an example, I'm going to put it up on the screen here, of a home that you might be looking at on Zillow. And in this case, you're going to see, and I'm going to put a couple of these up here so you just can kind of see how this looks when you have homestead versus non-homestead. In the homestead environment, you're going to see 3%, maybe it goes down 1 year if values go down, but then back up 3%. In a non-homestead environment, you're going to see things where they jump pretty significantly. So you might see 35%, you might see 17%, you might see 7%. That is the benefit of having a homestead. So if you're coming here, or if this is your primary home, you definitely want to make sure you homestead. If you're thinking about coming here and have the opportunity to make it your primary home, this is your opportunity to actually benefit from some of the homestead exemptions. So let's talk about Zillow, because it is a really good tool for you. It's a commercial tool. You can see properties, sold history, tax history, etc. One thing to note, and I've shared this before, but Zillow is a lead generation company. That's what they are. They're a marketing company. When you see the contact agent button on a listing, and I'm going to give you an example here, you think you're contacting the listing agent, but you're not. So when you hit that tour of the property, contact agent, whatever the button actually says, what's happening? There's a bunch of realtors in every market that basically pay for leads in certain zip codes. So like if you want to buy 33913 or 33928, you pay a lot of money every single month, and then Zillow guarantees you X number of leads, which come from you, clicking that contact agent button. And let me just tell you, I'm going to share an experience here where we have a $3.5 million listing. We had a showing request. It's a listing office agent company. So we were at the house. We watched the agent meet the buyers for the first time, which is fine. A lot of people, secure business in a variety of ways. Obviously, you meet sometimes at the property for the first time, but it became more and more clear. This agent was a part-time agent. She was a server in a restaurant somewhere else. She lived in Cape Coral, like 45 minutes away from the listing. Didn't know the house, didn't know the community, and asked our team to provide the amenity tour. So it's just one example. When you're hitting contact agent, you think you know what you're getting, and you might not be. She was on a team that provided leads, Zillow leads. So, you're really at the roll of the dice. It is hand-to-hand combat. When you hit that button, it immediately pushes out to like 5 different agents at the same time, and whoever like answers that call the fastest gets the handoff to the lead. That's how that works. And I'm way off track. Anyways, back to Zillow and the tax history. So you can look at a couple things, and I'm going to put these up on the screen here again, where you can see tax history and sales history. And in the years that someone was homestead, let's say, and then they sell the home, and then the very next year when the taxes come back out, if that person's not homestead, or even if they are, it's going to reset at the price that they bought into. The assessed value will be a little bit south of that, but it basically renews, and then you're going to see that really big jump. So, when you're looking at taxes, just know if it's someone that's been in the home for a while, and you see those 3% increases, just know that's not the tax amount that you're going to be paying. Let's talk about qualification. What does it take to get the homestead exemption? It's pretty simple, actually. It has to be your primary home. You have to live in the home as of January 1st for the tax year that you're applying for the exemption, and you have to submit the exemption by March 31st of that tax year. Those are the requirements. Once it's processed, you will have a homestead exemption, and there's even some portability, meaning if you buy another home in the state of Florida and caught some appreciation, you'll be able to take some of your homestead exemption with you. And there are tools and calculators. If you just do a quick Google search, you can find some of these. So it's helpful to get on there and look at it. Lee County actually has a tax estimator. I will put a link in the comments. And on the tax estimator page, you can put in your home if you are a homestead exemption, and it will actually account for that in the estimate, which is nice. So I just mentioned the portability. This is an important thing. If you have made or caught more than $500,000 in appreciation, you're going to be able to bring some of it. The $500,000 is portable. So, there is a process to move that $500,000 in the homestead exemption into the new property. So if you caught a pretty good run and then captured that, you can actually take it with you into the next property. There's a few more provisions, and they're not going to apply to a large group of people, but if you're over 65, make under a certain amount of money, you can actually qualify for an additional $50,000 exemption. If you've lived in the house for over 25 years and it's under a certain valuation, it can qualify for additional homestead exemptions. It's worth looking into if those categories, or if you meet any of those categories, but really the first 2 to 3 that I talked about, the tax benefits, the Save Our Homes, those are the ones that are going to apply to most people that qualify. All right, so it's the homestead exemption. It's not the sexiest topic, but it's important to know. Those are while you talked about the criteria or the requirements to meet it, we talked about the protections it affords. It's important to understand how it works, to know the requirements and the deadlines by which you need to submit. So if you have questions, drop them in the comments. We're happy to talk about it. Again, homestead exemption is a powerful tool to not just potentially reduce your taxes, but to protect one of the largest assets in your portfolio. And of course, I'm not a tax advisor. If you have any questions, you really need to talk to a tax professional to better understand the homestead exemption and how it may apply to you. On the surface, we're conversational. We understand how it works. We have homestead exemption ourselves, being primary residents. We can handle some questions, but anything that's really more specific you want to bring to you a tax or estate professional. As always, thanks for watching. We hope you liked the content. If you did, please hit the like or share button. If you know anyone that potentially could benefit from this, please send them the video. Drop any comments below, any questions that you may have. We'll make sure to address them, and we'll see you on the next video.